Welcome back. Joining us now is Kunal Shah from Nirmal Bank. Kunal, hi, welcome. Thank you for joining us. What's your sense really with the kind of big swings that we are seeing for many of these commodities? And I want to start with gold because we almost did 34.65 or thereabouts, and we're trading at around 33.85 right now. So from the highs of yesterday, we are down by nearly $80.
Yeah, Manisha, every time there is a peace talk and ceasefire kind of, or even the smallest news is coming and gold is immediately going down. So gold is not moving up on its own weight. It's only moving up because of the uncertainty arising from the geopolitical front. So the moment we see a mildest of the de-escalation in Israel and Iran, you will see gold immediately going down. I strongly foresee gold may not be able to move above $3,500 on COMEX, and in India above 1,02,000. I don't see gold going up immediately above those levels. So my view is it's a time to take profit in gold. I'm not saying that it cannot move up. It can move up, but logically this is the right time to book profit.
Kunal, as is said that perhaps with the geopolitics going on, it may be a $10 premium in case of crude oil prices at where it trades. How much of a war premium or a geopolitical premium would you say is gold carrying right now?
I think gold is having at least $100 of premium with the current prices. So if the geopolitical premium wades out, I think gold can go down by another $100.
What's your sense? I mean, as you said, there could be a profit taking coming in. How down under do you see gold prices then going?
Any ceasefire, and I think gold will go down to the levels of 33.50 or perhaps 3300.
For the silver prices, though, Kunal, we've seen some consolidation happen and happen for a very long time now. Anywhere between 34 to 36 is how it seems to be trading at this point in time. What is your sense? Is silver a better bet, or with the gold prices expected to take or go down in profit taking, silver could follow suit?
Generally, silver follows gold, but I believe this time, in particular this year, silver's fundamentals are extremely bullish, and whatever price spike we saw, and after that prices are not showing any major movement. But I think prices are consolidating, and the likely move would be possibly a big upside, another big upside from here. So silver, I'm pretty optimistic as compared to gold. I don't see silver as a precious metal. I see that commodity as a proxy to industrial metals, EV, and all other stories. So silver's fundamental outlook is very bright, and one should buy the dips.
How are you also looking at the copper prices? Because we've seen some strength come into for that one. The dollar index is slightly on the weaker side. The Chinese retail sales data came in better than Street was expecting, and that has led to some supported metals, especially copper.
Copper, I'm bullish. There is a major supply side issue going on in Chile as far as the concentrated market is concerned. I've been speaking this for quite some time. In spite of China's economic activity have been contracting, we are seeing copper prices holding steadily above 760 rupees. So we are not seeing copper going down. I think the possibility for copper to move up is very high, considering the overall demand-supply scenario, especially the supply scenario, and that makes me believe that copper can test $10,000 in next 3 to 4 months' time.
Kunal, also, what's your sense on crude prices now? $8 of a swing in the markets yesterday, and we're looking at prices holding firm even right now.
I think oil, if you look at any blockage of Suez Canal, that can lead to $5 to $8 spike. Any major oil field getting affected in Iran can lead to a price spike. So there are a lot of ifs and buts, and I cannot tell you that you just buy. So I think I would believe that right now any decline to 6,000 rupees would be a buying opportunity, considering the kind of environment we are. Even if your stop loss gets hit, the right trading strategy, considering the geopolitical event in crude, would be buy.
And also your sense on the dollar index right now, because that also seems to be quite choppy at this point in time, given the fact that we've seen Bank of Japan come out with its central bank monetary policy announcement today. But we have the US Fed that comes in on Wednesday. You also have Swiss National Bank, China, Bank of England, all of those central bank meetings also happening within this week itself. Which one are you watching and what are you expecting?
I think the possibility of rate cut in US is very low, in spite of Mr. Trump has been insisting Jerome Powell to cut the rate. But I don't think so that's going to take place. And with oil prices again back above $72 for the Brent, I don't think so cutting interest rate would serve the purpose. As far as US-China trade war is concerned, that is going to be inflationary. 50% tariff on China and 10% US is going to pay. But that proportion, that is going to be very expensive. And I believe that considering everything, the fundamental trend in the US debt is definitely on the lower side. US dollar is heading towards 95 first and 90. So expecting a 10% cut in next, and the pace of de-dollarization is picking up further. So I think the fundamentals are not very positive for the dollar index.
Okay, all right, Manisha as well as Kunal, thanks very much for joining in and giving us all of that perspective. Well, we did have some